everyone, Shannon here again with another financial freedom video for you all. Now today we'll be discussing how to rebuild one's credit. Now one step that I have personally taken to build my credit was to get a secure credit card. Secure credit cards are those credit cards that one must give a deposit as collateral to even get the card open. Now, the deposit can range from anywhere to a minimum of $100 upwards to $1,000. It really depends on the bank. Now, this collateral, it is given in case you do not pay the bank back. So, for example, if you have a $300 credit limit, you give the bank $300. You decide to charge it, don't pay it back, the bank keeps that $300 and your credit report is affected negatively. So, don't do that. Now, I would say that, for example, Bank of America, who I started with first when I was trying to establish credit from the get go from scratch, I recommend them because they're just easier to deal with. Their deposit was at the time $300. And after a year of on time payments, they gave me my money back. Plus, they gave me a credit line increase. So that's what they did. I'm not sure if other banks do that, but that was my experience with them. Now, another way to go ahead and rebuild your credit would be to make sure that you pay on time. Now, some people find that difficult. I always recommend putting a reminder on your calendar in your phone, or even working out some kind of payment schedule in the app for the credit card company for their specific app. That has worked out for me. Now, another thing you can do to rebuild your credit is to use less of the available credit you do have. Now, when I say that, it's kind of counterintuitive because it's not exactly rebuilding your credit, but it's stopping your credit from getting worse. And what I mean by not using all of your credit available is, say, for example, you have $3,000 on your one credit card and $5,000 on another credit card. That's 8,000 total. What you don't want to do is max that out to 8,000 total across all your credit cards. That's a very bad look for you. Now, one thing that is recommended is to use not more than 30% of that total credit. So for that 8,000 total, you don't want to use more than 30% of that. That would be 2,400. So, but for me personally, I would like to use less than that 30%. I personally use 15% just to be on the safe side, because that shows that you're not desperate for credit, that you're not overusing, that you're responsible, that you don't need to just always be living off your credit cards. So that is one thing I would recommend to do, is to just not max out your credit cards and stay under that 30 or 15% utilization ratio. Now, another way to rebuild your credit is to become an authorized user on someone else's credit card. Now, what I mean by that is you ask someone you know, someone you trust, who trusts you, to add you to their credit card account. Now, this does require you to give them your social security number and your true full name. So that's what I mean when I say you have to trust them and they need to trust you. So maybe family or friend would be able to be the person that you could ask to let you do that. Now, one thing about being an authorized user is that if you do not pay on those cards, they can be liable for any things you've purchased. So that, again, you need to be trusting each other with that. And also for the authorized user, I would say that an older credit card is best to be added onto, because older credit cards have a longer payment history, and that'll be better for you when you want to rebuild your credit to be on an older card. And also, a card with a higher balance will be better for you, because it would look better to be on a $3,000 credit card than a $300 credit card. So that is my recommendation for the authorized user. Now, the very last thing you can do to rebuild your credit, which will be the very end thing you could do, like if you're desperate, would be to become a cosigner. Again, you need to have trust between people, because if you're a cosigner, you take on the debt that the person is taking. Well, you take on the responsibility of whatever debt that your friend that you're letting get onto your loan. If they need like a car loan, for example, and you are a cosigner on there, you're taking the risk that the bank will not take. So just keep that in mind, and again, there needs to be trust. And if you're going to be a co-signer, make sure that you explain to this person who you're doing this favor for that anything that they do, any charges that they've made, any payments that they don't make will reflect back on you, and you'll be left holding the bag. So again, there's a lot of trust that needs to be um, established between those last two steps I said. All right. And that's all I have for you today. Thank you so much. And if you like this video, please like it. If you really like it, go ahead and subscribe. I'd really appreciate that. You take care now. Thank you. Bye bye.